From the studios of Farm Journal Broadcast, this is AgDay.
Showing life in rural America, one paint stroke at a time.
I like big art. Why not go bigger?
How one artist is capturing small towns on a big scale as drought conditions continue to impact things on and off the farm.
We have seen significant worsening in recent weeks.
USDA gives us a new snapshot on last year's crops.
I mean, most of these end users, most elevators, they had very little corn, if any, on hand.
And what that could mean for the crops now coming out of the ground. Right now on AgDay.
AgDay, presented by Pioneer. What's next happens when the name on the cap matches the power of one's purpose. Pioneer, what's next happens here.
Good morning, I'm Clinton Griffiths. The marketing year for the old crop is now complete, and USDA is revising production from last year as well as what's still left in the bin. The agency releasing its quarterly grain stocks report on Friday. It puts old crop corn at 1.36 billion bushels. Now that's down 1% from the estimate last month. And it's now revising corn production for last year down 15 million bushels. For yields, it's raising them up just slightly to 173.4 bushels to the acre. For soybeans, it's believed 268 million bushels are still in storage. That's down 2% from September. And it's also revising last year's soybean production down almost 6 million bushels from the previous estimate. Yields, a small revision there, up to 49.6 bushels to the acre. Wheat stocks coming in at 1.78 billion bushels, up again just slightly from a year ago. AgDay's Michelle Rook also poring over the numbers. And Michelle, we also got a better look at wheat production.
That's right, with USDA also releasing the small grain summary. Now, in sum total, the USDA reports were bullish for corn with lower than expected quarterly stocks, but disappointing for soybeans with higher soybean stocks. Wheat numbers were also bearish with higher than expected production. USDA's 1.36 billion bushel quarterly stocks estimate on corn was bullish, as it's the smallest since 2013-14, plus 70 million below estimates, 90 million below ending stocks. That lower figure was in part due to lower production by 15 million, but also higher usage. I caught up with Matt Bennett of agmarket.net in the combine cab. He says the old crop corn market was giving signals of the tighter supply.
The whole system coming into harvest. I mean, most of these end users, most elevators, they had very little corn, if any, on hand. June quarterly stocks was a bullish surprise. June quarterly stocks, I'd said several times, the only way it could be a bullish surprise with demand where it's been, especially export demand, is that last year's crop gets adjusted lower. And that's what we had today. No surprise to me.
USDA also lowered soybean production 6 million bushels, but still ended up with a 268 million bushel carryout, which was above expectations, and 18 million above old crop ending stocks. Bennett thinks last year's corn and even soybean production may still be too high, though.
I think given demand and whatnot and seeing where stocks come in, it's really hard for me to think that that crop wasn't maybe overestimated a little more. But regardless, I mean, that's the final numbers for now. For me, carry out still coming in is a little bit more robust than maybe a lot of folks thought several months ago.
Wheat stored in all positions on September 1 was slightly higher than expected, but production in the small grain summary was bearish as well, with an increase in all wheat at 1.8 billion bushels. Much of that came from the other spring wheat category at 505 million bushels, which was nearly 60 million bushels higher than expectations and the previous estimate. I'm Michelle Rook reporting for AgDay.
Another important report from USDA last week, the latest hogs and pigs numbers. The quarterly report putting the total inventory at 74.3 million head. Now that's up slightly from last year and up 2% from June. The breeding inventory coming in at just over 6 million head, which is down 1% from a year ago and also down 1% from the previous quarter. The breeding herd was down 1.2% from a year ago, which reflects recent sow liquidations. That's also resulted in lower farrowing intentions. However, that's being offset by the average pigs saved per litter at an all-time record level of 11.61 from June through August.
Here we are June, August, and now they say in this case 4% over last year. So yes, we do have smaller farrowings and farrowing intentions, but a lot of this is being overshadowed by this large increase in productivity.
And I think the pigs per litter probably helps identify the health struggles. Might have got a little bit better this year than last year, I think.
Now that suggests that pork production for next year will only be minimally below this year. Drought coverage is continuing to expand across the U.S. The latest drought monitor shows that drought conditions increased for the 10th straight week. Areas of the plains, upper Midwest, and mid-Atlantic all seeing some improvements, but the Southwest, South, and Ohio River Basin worsened. Now just over 38% of the country is in some sort of drought, and drought is continuing to cause problems on the Mississippi River. The Army Corps of Engineers reporting a significant drop in the river stage at St. Louis, with water levels 46% lower than the previous 3-year average and 24% lower than the same period last year.
We have seen significant worsening in recent weeks across the eastern Corn Belt, a bit of a flash drought going on there. Great for dry down and harvest activities, but certainly that is contributing to the problems with the low river flow in the Mississippi Basin at this time. Another area that has gotten considerably worse in recent weeks is the lower Mississippi Valley, and that is a contributing factor to the saltwater intrusion working northward along the lower Mississippi, pushing in the direction of New Orleans. That could be an issue unless we get a good flushing rain this fall to help to push some of that salt water back into the Gulf of Mexico.
And as those gauges dip on the Mississippi River, barge freight rates continue to rise. For the 37th week of this year, the American Farm Bureau Federation reports per ton costs are highest for all locations except the mid-Mississippi and Twin Cities regions, which are slightly below last year's rates. But it says for both this year and last year, rates are up anywhere from 28% to 51% compared with 2021, when river stage levels were more normal. Areas of the Corn Belt did see some rain over the weekend, but what could we see this week as harvest continues to roll? Meteorologist Martin Lormore has a look ahead.
Yeah, Clinton, a lot of places in the Corn Belt desperately needed that rainfall, and while they are still sitting in that drought conditions, where they're sitting still again seeing moderate to severe droughts all the way across the Corn Belt, much worse out toward Texas and Louisiana, a lot of places are going to be in for some of that much needed rain, especially across places where they're seeing that exceptional drought stretching in from San Antonio all the way into Mississippi. So precipitation this week is looking downright good. Look at that, all the way across the south, expecting upwards to an inch across widespread parts of Oklahoma, Texas, Arkansas, Louisiana, definitely needing a lot of this rain for sure. And again, places out toward the Corn Belt seeing that widespread half to around that quarter of an inch of rain. Every little bit helps. As they go throughout the rest of this week, things are looking downright fantastic. Of course, those temperatures are going to still be quite warm as we head into this afternoon. We'll cool down into the overnight. A lot of us reaching into the 60s, and this cooling trend will continue again while we are going to be pretty warm for that Monday and then our Tuesday. Things were going to be big time cooling down as we head throughout the next several days, especially this weekend. I'm talking temperatures widespread 5 degrees below the average for this time of year. We're desperately hoping to see some of those nice temperatures. We slowly slipping into fall throughout the rest of this week. So enjoy that while you get throughout the rest of this week. Hey, take a look at this. It's a great day of harvesting for Brian Buller of Cortland, Nebraska. Brian said last Friday couldn't have been much nicer. Said the office views, this is a pretty good office, are hard to beat. Have a fantastic harvest, Brian. I'll have more on that forecast coming up.
A USDA report and potential government shutdown all weighing on markets in the week. We'll take a look at what they'll be watching next coming up. And later, art comes in all shapes and sizes. We'll see how one artist is transforming some historical buildings, making them local attractions in Michigan, today in the country.
Got equipment to sell privately but tired of scams and hassles? Visit MachineryPete.com and click Sell Mine. MachineryPete.com, the simple and secure way to buy and sell equipment online.
Corn, soybeans, and wheat all reacting negatively to the latest grain report. Michelle Rook is back with a deeper dive in Markets Now.
Well, a lot of red on the board in the markets on Friday. Dwayne Bussey with Bulk Marketing joining us. And it really, in the grains anyways, wasn't about the USDA reports. It was more about the government shutdown, wasn't it?
I really think so, Michelle, that markets hate uncertainty, and we got a whole lot of uncertainty at the end of last week. You know, how long the government stays shut down, nobody really knows. But if you're long and you got profits in some positions like the cattle market, I think it was really easy to say, I'm going to get out here no matter what, take my winnings and just take my cash, and we'll see what next week brings.
And we did some chart damage in some cases. I mean, you got November beans, which took out the August lows. You had some lower weekly closes and just about everything too, didn't you?
Yeah, it was a really ugly way to wrap up the week last week, especially in the wheat market. That really went through in Chicago. We made new contract lows. Maybe it's doing what we should be doing in some of these markets. It's going to go down now and try to find some demand, which I wouldn't mind seeing our corn market actually do that as well, Michelle. It's export demand was pretty bleak last week as well. It sounds like China's buying corn from Ukraine and South America, not from us, canceling some beans on us last week when they should be buying from us. So I'm sorry, I really don't have a lot of good news.
And does that bad news continue in terms of the market action if the government shut down, if it looks like we're going to stay shut down for a while, or what are you expecting?
If the government stays shut down for very long, it's just more uncertainty and more clouded judgments, I guess. So yeah, it'll hang over these markets. It doesn't mean we have to sell off hard every single day, but I think it makes it really hard for these markets to rally, especially as we're going into harvest in a fairly open week to do that harvesting.
So let's talk about some support areas on corn and soybeans now. Where do we look for support in those markets on the charts?
Yeah, for soybeans, you actually got to go back. Well, we did make a little bit of a low in June back around that 1256 area. I think that's probably the first support there. And other than that, you go all the way back down to late May lows. And I don't think we have to go down that far, but 1250 should be fairly good support there first.
Right, 475 going to hold us in corn?
I don't think so. I think when I just look at the supply and demand, I think we have to go lower and find some more demand.
Okay, well, thanks for that update. That's Wade Bussey with Bolt Marketing, and that's Markets Now. We'll have more AgDay coming up.
For marketing advice, call Bolt Marketing, a futures and options brokerage firm.
Jet stream is going to be a big point we're going to be looking at throughout the next several days, throughout this entire week exactly. Now, where we're sitting right now, a lot of us are going to be on the warm side, especially in the eastern and southern parts of the U.S. This big high-pressure dome, this heat dome, will be keeping us quite warm. But you can already see it. Big, what we call a trough rolling through a lot of the western portions of the country from the Rockies almost to the west coast. This is going to start making its way into the area. While it's going to lose a lot of that southerly vector, it's going to maintain that strength, especially in parts of the Midwest where, again, they really need that rainfall, and they're going to be seeing that plenty. And as we get into that late week, I'm talking temperatures falling 10 degrees below average for some places out toward the Midwest, again, towards Chicago. A lot of places are going to be seeing those temperatures drop off fairly quickly into that late week, continuing that way for the next several days into our next weekend. Now, of course, rain is a big point because we're wanting to see a lot of that. And you can see, is that what something I see? Snow in the Rockies. Yes, there's something to see a little bit of that first snow of the year as this next little system rolls through this low pressure, wiping across the entire country, stretching rain all the way down to the Mexican border, which they're definitely needing that in parts of deep South Texas and Louisiana. They haven't seen a whole lot of rain, but continuing this rain all the way across the week. This will stretch into the Midwest as we head into that mid to late week. Again, much needed rain for places sitting in that severe to exceptional drought in Louisiana and Texas, and now starting to stretch into parts of Mississippi. So they're really looking forward to that rain. And temperatures, they will stay above average as we get into that first couple of days of October, but you're already noticing that's where that big low pressure system is. And this is actually going to scoot into parts of the eastern portions of the U.S. Now we're going to be looking closer to normal because while we will be below average during some days, other days closer to that average point, but you're already seeing places in the western part of the country, especially along the Pacific coast. That's where we'll be seeing those temperatures starting to get a little warmer yet again. So as we get into that mid-October, so we'll be looking a little bit on the warmer side. Greenville, Alabama, right near Florida. It's going to be pretty warm. Temperatures in the upper 80s. Out toward Bozeman, a little bit cooler out there. Highs in the 60s. Lows dipping pretty close to freezing. And then Cortland, Nebraska. This is for you, Brian. Temperatures 92. Pretty toasty, mostly sunny.
Machinery Pete fires up the time machine for a look at tractor prices coming up next. And later, meet an artist with an eye for big impressions. We'll make a stop at his latest work in Michigan in the country. How hot has a used tractor market been? Machinery Pete puts us in a time machine to give us an idea about what a wild ride it's been.
All right, folks, let's talk about how hot the used tractor market has been here the past couple years. And to illustrate how hot it is, we're going to walk backwards in time, not too far, just a couple years. Now, here's a picture from an auction we filmed for our Machinery Pete TV show. This was 2 years ago, July 8th of 2021. Sale was in Sleepy Eye, Minnesota, southwest part of the state. It was by Henslin Auctions, and they had this beautiful 2003 John Deere 8420 with only 1,760 hours on it, and it's over $167,000, which actually was a record high auction price by $10,000 over the previous high, which had stood for almost 9 years. You had to go all the way back December 18th of 2012 when an 8420 went for $157,000 on a sale in Independence, Iowa, on December 18th, again, 2012. So, again, 167 was the record. Now let's bump ahead to a year ago, July 21st, 2022, Delta, Iowa, online farm auction by Sullivan Auctioneers. This 2005 model 8420 with 2,827 hours on it, so for $182,000. So, bumped the record high auction price up by $15,000. And that takes us up to just recently, August 13th of this year, farm auction, Fort Madison, Iowa, by Frey's Auction and Real Estate. A very sharp, here's a picture of it, 2003 John Deere 8420, 3,741 hours on it, sold for $199,000. So again, we just went $17,000 above the record, and 2 years ago, that record had been sitting at 157.
All right, thanks, Pete. Up next, a piece of art that won't fit on the wall. We'll visit with the artist behind some amazing artwork that's standing out in farm country.
Got equipment to sell privately but tired of scams and hassles? Visit MachineryPete.com and click Sell Mine. MachineryPete.com, the simple and secure way to buy and sell equipment online.
What happens when a popular way of having your small town get noticed meets an artist who likes to paint big things? AgDay's national videographer Russ Natusco takes us to Edwardsburg, Michigan.
I gotta go higher, and I'm not thrilled about it. I am afraid of heights, but I'll do anything for money. I was a fine artist for a number of years, painting on glass, all the while kind of thinking, I like big art. Why not go bigger? Well, the building owner here, he just wanted something positive and colorful. This is a message of simply love in very large letters.
So how is this different than working on, like, say, your small country murals you've been doing?
Small country murals? One of them was the biggest thing I've ever done, the one in Michigan.
We called this the All Aboard Mural. Murals are the thing now. Every little town has murals, and I wanted the old depot painted somewhere in the village, so we had a picture of it. We wanted it to represent what the village would have looked like back then.
The whole mural was funded by donations. You know, it was a nonprofit that put it together, and they knew how to shake some trees and find some big donations.
We believe that it is the largest mural in the state of Michigan.
And the oddest one I've ever taken on with multiple buildings, but that was 9 structures. Some of them curved, some not. Some concrete blocks, some ripped up weird metal. It was a working grain mill, though it wasn't during season, so there wasn't much going on there.
This design is Brett's design. He wanted the buildings to look a little more old-fashioned. The big train car with the silhouettes are actual silhouettes of village residents that paid to have their silhouettes put in the train car.
Except for myself, I'm in there. There was just one left.
The one thing I like the most, I would have to say the train engine. It's so big, and you don't realize that from the road. It actually goes around the corner of the building.
I designed stuff on the spot. What if I put the front over here and the side down this way? I didn't know how that was going to look, but that ended up being like the showstopper piece of the whole mural. I love to paint bigger, weirder things, you know. Who knows, you know, I'd love to paint a whole factory, you know, giant square footage, you know, big outdoor thing.
It is an incredible work of art. It brightens up the place. I mean, it's so much brighter than just driving by a concrete mill.
All right, thanks, Russ. Now, if you're wondering, it took Brett 25 days to complete the mural from start to finish. And that's all the time we have this morning. We're sure glad you tuned in. From all of us here at AgDay, I'm Clinton Griffiths. Have a great day.